Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. It's Monday. It's October 2nd. I have to change my watch. My calendar says the 1st. I better not mess this up. It's about 7:53 in the morning. The market's going to gear up to open up in about an hour and 37 minutes to be as specific as I can with you. Now, I hope everyone had a great weekend. Before we get too deep into this, make sure to like our YouTube channel. That's the Roger-Scott YouTube channel. Make sure to subscribe to our Telegram channel. I give free trades, stock picks, all the goodies, and pictures of my furry assistants there. You don't want to miss out. We have over 2,200 people on that channel, I believe, somewhere around there. And most importantly, the link to my VIP room, which is still open for a very, very short period of time for the public, is available above or below this video. It's happening at noon today. You don't want to miss out. We give trades, trade opportunities, stops. Today we're going to talk about day trading versus swing trading, stop losses. We're going to talk about how to adjust your positions. We're going to talk about the biggest sector. You don't want to miss it. It's happening at noon today, and I'll do an earnings recap as well. It's like the second part of this video 4 hours later to kind of give us a perspective of what's going on in the market. So please watch this video, and please, please, please subscribe to our Telegram channel, our YouTube channel by clicking the bell, and post comments for me. If you don't post comments, I can't respond. And if you have a question, roger@rogerscott.com. Whew, did that one pretty quick. All right. So notice yesterday, right after the government shutdown has been averted, I know everybody's been worrying about it, but folks, it's a game they play. They do it every single time. I had 100% confidence that it was going to be resolved. You know why? Because if it doesn't, it makes their job 10 times harder, and nobody wants to work 10 times harder if they don't have to. It's called human nature, and I don't care who you are. The House, the Senate, you still work by human nature. All right, so I had no doubt it will be resolved. But here's the interesting part, more important than the resolution. The market's not reacting to it at all. Matter of fact, you could tell by the price action. Now, it rallied a little bit right afterwards. I was looking at price action. I was actually going to telegram you, but I figured, you know what, I'll wait to see what happens. And if you notice, the market's not reacting to it, which means it was pretty much priced in. There wasn't much debate on Wall Street whether it was going to get taken care of. Otherwise, the market would be bolting higher right now, and it's not. So this agreement didn't really solidify anything or change the action on the market, which means it was pretty much priced in, which is exactly what I've been saying all week. Now, we've got some earnings this week. You've got McCormick, food and beverage companies. Now, the reason I'm talking about this is because XLP, consumer staples, are in fashion this week. You've got a lot of earnings on let me show you the earnings reports. You've got McCormick. You've got Calm. I don't know if that's a consumer discretionary or consumer staples. We'll revisit that one. But most importantly, on Thursday, you've got Lamb Weston, Conagra, and Constellation Brands. And you also have Levi's, which is a consumer discretionary. But the point is, this week is going to be the common theme, or the rhyme this week is going to be on the consumer staples. There you go. Same thing, but they're consolidating. That was an intraday chart, by the way. That was an hold on one second. Yeah, that was an intraday chart. But here, they're moving the same way, but they're bottoming out. They appear to be bottoming out. So again, you got to keep your eye on the consumer staple index, because this downside move may be ready to subside and come back up. Also, we're really oversold, so be really cautious with consumer staples in light of the fact that we've got earnings, 3 major reports. You've got McCormick tomorrow, you've got Lamb Weston, and you got Conagra and Constellation Brands. So there's a lot on the table. And again, keep your eye, because on an intraday basis, they might have bottomed out, but on a longer term basis, they've got some more consolidation. So watch these levels very, 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 very carefully, really, really cautiously, okay? If we tune out, you could see that we are not really, I mean, we're kind of near longer term support, but we're really cautious we could break out here. Semiconductors appear to be moving higher, and I like that. Also, NVDA got upgraded, which we'll talk about in a minute, but I'm liking what I'm seeing with semiconductors. I'll talk about Tesla and NVIDIA in a minute, but I'm liking techs right now more than I did last week. We've got a lot of little pieces, little puzzles of Fed data this week that could be extremely instrumental, including the Producers Managers Index, the ISM. This is the Institute of Supply Management. They're coming out with data today. So keep your eye on these because this will all give us clues as to what's happening with inflationary data this week. So you've got PMI, you've got ISM, you've got ISM Services, Institute of Supply Manager Index, you've got factory orders, you've got international trades in goods and services, you've got job openings, and you've got employment data. All of these little reports are going to give us major clues into how the economy is doing. Now, looking at the bond market, you can see the bond market is not reacting positively. It's actually reacting negatively. It's down it's down 1% right now. So the bond market's not holding up. So the question is going to be, is the SPY going to stay above or below these levels? Well, if you look at right now, let me just show you a different area. I want to show you something different right now. There we go. That's what I wanted to show you. Look at the SPY and look at what it's building right now. Let me just take this study off. It's just more confusing than anything else here. Okay, see this price action? See this declining channel? Believe it or not, but these declining channels can actually be bullish if we break out above this level. But for now, I think we're going to go up and down on this channel. So as you can see here, we broke down at this channel, and now we're looking to move up. I wanted to show you this clean chart because it actually explains everything better. Now let's look at a different chart so you could see. Let me just show you the moving averages and everything else. There we go. That's the 200-day. That's the 50-day. We're like right around the 100-day right now. So if we can come up here, it would be great, but we need to take out this high. If we don't take out this high, it's going to be a downtrend. But you want to watch for this level, 420 to break or to go above 431. Those are the levels you want to watch on the SPY. On the QQQ, which is it's not as downslopey, you want to watch for the 50-day moving average this week. That's at the 370 price level. I'm pretty sure the market does not want to go down all that much right now. It wants to stabilize. And the fact is, we are bouncing off these lines. And there's the 100-day is right here. Let me just put it back up here. Let me put the 100-day moving average. There we go. Perfect. You see that? We're right abutting it. So if we can go above the 100-day moving average, we could potentially see some upside. And as I mentioned on the SPY, you'll see the 100-day moving average is right up here. So the next major level, regardless of what we do, we need to break above the 100-day moving average. Fundamentally, let's talk a little bit about fundamentals, right? And talk about what we can expect from the market and what we can expect this week. And let's tie in everything. And I want to talk about Tesla and NVDA before we depart. So market participants are looking ahead to comments from Jerome Powell. He's speaking today. Mr. Squirrely, be careful and watch the bond market. Embracing for more data on U.S. labor market after a U.S. government shutdown was averted. Yay. The bill sustained government funding 2023 levels until November 17th, only 45 days. Did not include no soup for Ukraine, but increased federal disaster by $16 billion. That's not good for Ukraine. The U.S. Department of Commerce showed that U.S. core PCE price index, which is important, didn't really rise, which is a good thing. U.S. September Chicago PMI came in a little bit weaker than expected. And the Michigan consumer sentiment was revised lower. Now, here's the good stuff. President John Williams said Friday, Fed is at or near peak on interest rates and is anticipated to hold around those levels for some time. I expect we will need to maintain a restrictive stance of monetary policy for some time to fully restore balance to demand and supply and bring back inflation to 2%, blah, 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 blah. Basically, what he's saying is we're towards the end. We're not towards the beginning. Now, I agree with him, and I also agree with him where he's saying we're going to be staying around here for a while. We may not be taking interest rates higher, but we're going to be staying here for a while. Why? Because we need to wait and see what happens. Now we're pricing in a 37%. It's been moving between 30 and 40% that the Fed is going to raise rates in December. I don't think they're going to do anything in November, but there is a higher chance that they will be doing something in December. And I think that those odds are going to go higher. Jerome Powell, Harker are scheduled to engage today. Oh boy. I hope he doesn't pull anything squirrely out of his bag of tricks. You've got ISM manufacturing index. You got manufacturing price data. That's all coming out. Europe is down slightly as investors are digesting regional manufacturing data, waiting for remarks from Powell. Oh boy, don't get me started. Japan gave up early gains and closed lower, weighting by weakness in energy and healthcare stocks. Keep an eye on those stocks here in the U.S. The Bank of Japan survey showed Monday that confidence amongst Japan's largest manufacturers picked up more than expected, while sentiment among non-manufacturers surged to the highest level in 32 years in 3 months to September. Folks, they need to start raising their rates. If you guys don't start raising your rates, nothing good's going to happen. NVIDIA is climbing. We'll talk about that in a second. Datadog is climbing. They got upgraded. Let's take a look at Datadog. DDOG. Let's see if there's anything good there. It's trading below the 50-day moving average. I would probably want to trade this only to the short side. Now, let's do our sector analysis, and then I'll talk about NVIDIA. So, sector analysis. Energy took a big dump on Friday. Retail took a dump on Friday. Communication took a dump on Friday. Healthcare took a dump on Friday. Look at this. Across the board, everything looks awful. Awful. The Russell looked okay, but for the most part, things did not look good on Friday, and that's partly because, look, everything's closing down, down, because of the market shutdown. But again, I'm not seeing a big reprieve right now, so hopefully, we will see some good stuff as the week continues. One thing I will tell you, you got to watch consumer staples very, very closely this week, and you got to watch, where's consumer staples? Consumer staples you got to watch closely, and you also have to watch closely, not retail, but home builders. Where's my home builders? Who moved my home builders away from here? Where's my home builders? I usually have my home builders here. No home builders? Huh. Where's my home builders? Guess I don't have home builders here. I thought I did. Let's see here. Very interesting. I could have swore I had my home builders here. Anyhow, we'll keep an eye on that. Let me see, maybe here? Home builders, maybe there they are. What's going on here? Like somebody's moved my cheese. Let's look at home builders. I had it on the other tab. Home builders. There they are. Now, home builders and retail, notice we didn't close all the way down. Mid caps, there actually looks to be some love here, and they had bad data, and they were outperforming. So we may be moving up on the home builders, a sector you need to watch today. Now, Datadog, I wouldn't want to buy right now. It's below the 50-day moving average. But I want to show you something interesting. NVIDIA got upgraded. NVIDIA's literally bouncing off the 100-day moving average. This is why the 100-day moving average is very important. If you didn't have it, you wouldn't see this. NVIDIA, look how it hugged the 100-day moving average. It's about to cross the 50-day moving average. Now, it's still below the 50-day moving average, but the 50-day moving average is only about 10 points away. Now, here's what I would do with NVIDIA. I would look at the intraday chart, intraday, and I would look at the chart the first, right here, I would look at this chart the first half hour of the day, maybe even the first 45 minutes of the day. And then I wouldn't take it to the short side, not even close. But if it breaks out of the first 30 or 45 minute intraday window, you want to go to the long side. I like NVIDIA for that right now. I think it may see some love if the market reverses. If the market doesn't reverse, no soup. Also, Tesla. Let's take a look at Tesla. Tesla is right at the 50-day moving average, okay? If Tesla starts breaking higher right now, we can have a nice move. So I want to do the same thing for Tesla. I want you to watch Tesla the first 45 minutes of the day. And if you see it breaking up above the first 45-minute high, that's where you want to be. So I could be a little bit bullish on both Tesla and NVIDIA. The key level right now on Tesla is 254. If it breaks 254.73, there's a really good upside. We're right at the 50-day moving average. And if we open below, which we are, and go high, that's when funds start bringing things in. So watch Tesla really carefully and watch the first 30 to 45-minute range on NVIDIA and Tesla. Now, folks, wow, I covered a lot of stuff today. Before I let you go, I just discovered a pricing mismatch in the options market that's shown to pay out double or even triple-digit returns from a small 1% move in the stock. I like that. When you see what a 10,000 hypothetical account would have turned into by exploiting this pattern over the last 10 years, your jaw will drop. Click the link below and check it out. Keep your eye on Tesla and NVIDIA after the first 45 minutes and keep an eye on how the market reacts, because the market is not reacting nearly as bullish as I would like to have seen after this aversion of the government shutdown, which is not a good sign. And we are right now on the S&P in very, very dangerous territory. We're not in the best place right now. We're right close to the 200-day. I'm thinking we're going to go up, but we got to be careful. So I'm hoping that this channel will continue moving higher. And if Tesla and NVDA show us their hand today, it may be the beginning of that. So I want to make sure we're prepared. Keep an eye on everything and be really, really careful, because the market can turn down like that. It didn't react to the Fed news, and that's negative, okay? I'll talk to you guys later. Subscribe to Telegram, post comments below the channel, and visit my VIP room. I'll see you there at noon, and we're going to get into it hot and heavy. I'm going to roll up my virtual sleeves. Bye, guys. Have a great, great, great week ahead.